I wanted to really change my career and focus on real estate full time, which I eventually did in 2021. And so I just wanted to grow faster.
Awesome. What was the pivotal moment to change over to multifamily?
I think I
Founder and CEO of Appleman Properties. Today, we're joined with Tony Castronovo. Tony is a managing partner with Novo Multifamily Group, is a seasoned real estate investor and managing consultant with over 1,150 units to his name. He also leads Grit to Growth, coaching entrepreneurs to design intentional lives. Tony, we appreciate you coming on today. If you could let everyone else know a little bit more about yourself.
Yeah, absolutely. I am thrilled to be here, Josh. Actually, that 1,150 units is literally as of yesterday. So we just closed on
Nice.
57 units in Texas. And yeah, it's I think my ninth multifamily property I've been a part of, different capacities. And before that, really kind of pulling back the real estate curtain here back in 2014 is when I started in the space and single family, actually. Probably like some of your listeners, just buy and hold, doing a little bit of flipping, just cutting my teeth in real estate. And then in 2018, decided to pivot fully into the multifamily space.
Awesome. What was the pivotal moment to change over to multifamily?
I think I had a good process and system after about 4 years in single family, and started to get very comfortable with adding on more properties into my portfolio. But then I started realizing, man, scalability is tough here. One unit at a time, and just thinking about how long is it going to take for me to get to really where I want to be in this journey, because I didn't want to just do it as an investment on the side. I wanted to really change my career and focus on real estate full time, which I eventually did in 2021. And so I just wanted to grow faster.
Yeah, faster, less, more units under one roof or single roofs versus multiple. It's the maintenance. Everything's economies of scale with multifamily. It's helps you to manage everything a little bit better with budgets, money, and people.
Yeah,
Awesome.
and there's one other aspect of it is it is more of a team approach. It's more of a business. I mean, nothing against being in single family. You can certainly grow that to be a phenomenal business. But what I found was that my first multifamily, I learned the hard way. I opened my checkbook to buy it. I had no idea. I thought I would just buy it like any other property. And it was a lot of pain. I had 100% of the profits, but I had 100% of the risk and the liability. And
Yeah.
and so I learned about being a part of syndications and being a part of larger properties that truly are running a P&L. And there's all kinds of roles, from asset management to capital raising, capital attraction, investor relations, you name it. And I like being a part of businesses.
Yeah, for sure. And like you said, you can have more people to the table that can help partake. You have professionals that can do your asset management piece, your capital raising if you need, the sponsor, the KP. I mean, you're bringing some high level people around in one deal and getting it to the closing table. Talk to us a little bit about the deals you just closed yesterday. If you could, let us know how you found them, the debt that you used, going through the approval process, and now you're getting ready to execute on a business plan, I'm sure. So if you could just take us through the journey.
Yeah, and honestly, I'm gonna have to just be a little high level on it,
Yeah,
because it's one of those situations where right at the last minute, the lender decided to reduce our loan proceeds. And so we have just a little bit of post close raise to do on it. So I can't really publicize too much of the deal at this point
got it.
on air. But I'll tell you, some of the background on it. It's a 2013 build in the Houston MSA, and one of the fastest growing communities in the Houston area. One of the reasons why I really like the property is just because my partners have kind of done this same vintage, same builder, 10 minutes away, multiple properties that that are all very similar to this one, and which means that there's consistency and confidence in the business plan. And like you said, getting ready to roll up our sleeves and go do it. Absolutely. I mean, literally, as soon as we inked it, guys were showing up, with the trucks ready to roll, hanging a new banner, so it was just a process that we just need to kind of unfold and let it, take its course. And boring real estate is good real estate for me, right?
Yeah.
Consistency in the operations is really what I'm after. So, yeah, that's the skinny.
So what kind of business plan do you all have on this particular property? Are you renovating all the units, bringing them up, refreshing them, or are they already renovated?
Yeah, so as you might imagine, with a 2013 build, it's still in great shape. It really just becomes adding amenities and trying to bring it up to a standard of new builds that we
Yeah.
might compete with. But it's garden style. It's got lots of great amenities, from fitness center to dog park to amazing outdoor space with the pool and barbecue areas. And we're just going to refresh a lot of that. And then on the interiors, we have a whole new palette for how we're doing everything, from the kitchens, the appliances, etc. So we're gonna definitely put money toward about 100 units, give or take, and bring them up to another standard.
Got it. Awesome. Is that so the value add component here is just refreshing, and then I'm assuming that the rents are lower than surrounding properties, so you'll be able to bring them up to market.
Yes, absolutely. Yep.
Got it. Very good. Very cool. So tell us about some of your other properties. What's maybe a journey down your favorite property through finding it, putting it under contract, and closing, and then what took part after the closing?
Okay. Yeah. I mean, maybe I'll pick. How about this? I'll pick my most challenging property.
That's perfect.
Yeah. Yeah. So it was property number 2. And so I was a year into property number 1, and that was what I call an IRO, independent real estate owned. So I opened my checkbook, it was all me. But I was learning the multifamily space and making great connections with contractors and property managers and so forth. So I felt after a year that I had my sea legs, so to speak. So now I'm looking for property number 2. And along that journey, I had been trying to surround myself with people to make me think bigger. So the first one was a 20 unit property. And I was patting myself on the back a little bit. Hey, I got my first multifamily. And guys that I was surrounding myself with are like closing 140, 200. And not that unit count makes a big difference, but again, this is a business. These are P&Ls. And that's really what I was aspiring to do. So I said, well, how can I do something like that? And so I started learning about syndication. I started getting more acquainted with potential partners. And so I found a mentor of mine that was able to KP on my deal, and a little bit more than KP. He was truly a general partner, mostly to help me with credibility because I'd never syndicated a deal, as well as to be a balance sheet partner and help me sign on the loan. So that's how I got into that deal. It was a 60 unit. It was about 2.5 miles from my first property, which made it part of the story and the scalability, the efficiencies with working with different vendors. And then really where things started to kind of go off the rails a little bit was I bought it 3 months before COVID. And so we immediately got in there in late 2019 and started executing our business plan. I got contractors in and out, renovating units, and we're doing all kinds of stuff. And then all of a sudden, we just hit the brakes. And literally, I could not show a unit without putting a lockbox on the unit and letting somebody self-show themselves, which is a disaster. So my property manager could not actually be on site showing potential residents any of the units. And so that was just the beginning of a series of challenges with, eviction moratoriums everybody's kind of dusting the cobwebs off right now, listening to this about all that we went through just
Oh
a
yeah.
couple years ago, right? But that was the challenge that I was living in, and we had to pivot to make that a success.
Yeah. Yeah. That was definitely a big deal to overcome in the middle of the unknown for sure. And you closed right before everything. So that's good information. That's cool. And you had mentioned mentorship. So I know we wanted to touch on this topic because that's huge to succeed in really in any business, including in life, is to have mentors that have already been there, done it, and kind of paved the way. Can you touch on mentorship for us, for the listeners?
Yeah, of course. A lot of my mentors have been informal. So this person actually I had known from my corporate days. We probably knew each other for literally 20 years at that point. We would always compare notes because I got started in real estate before he did, but he went straight into multifamily and never even touched single family. So he was ahead of me there. And so there was always this informal mentorship between us. And when it came to doing syndications and multifamily, I leaned on him pretty heavily. And, that was a great relationship to take advantage of there. But formally, I joined a program. I'll just kind of put it out there, a little plug, the Jake and Gino Wheelbarrow Profits program. That was something I got involved with about 2 years ago. And it's one of those programs that you pay into. You're getting the education, you're getting a community, you're getting the network, and it's really what you put into it that you're going to get out of it. I know that's very cliche, but if you just join a program like that to say, oh, they're going to teach me everything I need to know about multifamily, and then they're going to just hand me deals to go take down, it's not going to work that way.
Yeah.
Right. When you go to the events and do some networking, everything, the magic, if you will, happens outside the classroom. It's the happy hours, it's the dinners, it's like when I go and travel to some of these events, 6 a.m. I work with a group of folks that we go out for a run, and a lot of relationships are built in those opportunities.
Yeah, yeah, that's 100%. And those relationships that you make in those events, I mean, the energy that you can be in a room is just huge. I mean, compared to say a Zoom meeting. You're handing out business cards and you're finding out what everyone's capabilities are, and you can create a pact, and then that's your general partnership. Everyone brings a value to the team, and being there live with people, it's a different energy.
Yeah,
It's good.
and you've got to invest in people, right?
Correct.
So you can go to an event with an agenda of, well, I'm gonna learn this aspect of multifamily real estate. That's great, but you should also have an agenda for relationships you want to cultivate. You're going to meet people, you're going to meet a lot of people, and maybe it's 30,000 foot, but then over time you want to go deeper with a set of individuals that maybe you connect better with,
Mhm.
and ultimately start to form partnerships.
Yeah. And I think I also read on your bio that you help entrepreneurs get to the next level as well. Is that correct?
Absolutely. Yeah. So maybe you're hinting on my coaching business a little bit. So,
For sure. I'll put the plug in there if you want to elaborate a little bit on that and just to let the audience know what that's about.
yeah, thank you. I mean, I think that here's something that I took away. Okay. So anybody looking to quit a W-2 job and go straight into real estate and live this life of entrepreneurship, here's what I learned. Think of a conveyor belt, and you purchase an asset, a multifamily building. You put it on your conveyor belt, and if it's a syndication, maybe it's running for 5-6 years. And eventually when it comes off the conveyor belt, maybe you've reached a point where that might spill into 2 properties, let's say, right? If you double your money in 5 years, you take the proceeds and you put it right back into real estate and put 2 assets on your conveyor belt, metaphorically speaking. Okay, but after you put 1 on, maybe you put 2 on and 3 on and 4 on. Well, the goal is to get your conveyor belt running to the point where it's perpetual. You're not pulling money out of your bank account to get into real estate. Your deals are helping you get back into real estate, right? That's when you have something in the way of income. Along the way, you're building wealth. But if you want income and you don't have a W-2 job, you need to find a source of income, because you got to get to that first asset coming off your conveyor belt, and that could be 5 years. So what do? When I realized that, I said, well, I don't want to go back into the corporate world. I want to stay as an entrepreneur. So where can I bring value? And I went through a bit of an exercise that I called the honeybee approach. And it basically starts to evaluate different streams of income. And you go through it by thinking about, what are you passionate about? Where are your skills at? What time commitment is this going to take from you? Is it scalable? You go through a series of questions. And what percolated to the top for me was all things around coaching, training, mentoring. I was a consultant for 25 years. I worked for companies like Ernst & Young and Accenture. And so obviously that's in my background, but I wanted to put a spin on it and say, okay, let's look at the world of coaching. And I didn't approach it like, well, it's just like consulting. I went and immersed myself in a formal certification program for 9 months. I literally was working hours and hours every week to become a certified coach. You could say that I'm certified to be a coach for all things, life coaching, business coaching, you name it. But my niche is entrepreneurs and business. So I launched last year in my entrepreneurial coaching business. I help entrepreneurs to step out of their corporate job, and once they do, to actually work through all things that come at them, from business to personal, you name it. On the business side, I also work with experienced business owners. If you have an established business, then I can help you grow revenues, reduce costs, ultimately to drive profits in your business. And I have a very formal, methodical approach for going through that, an entire playbook that I take my clients through.
Nice. Very cool. And that could be, that can add a huge value to someone's journey in life, just from going, getting the confidence from stepping out on their own and doing what's driving them. That's for sure.
Absolutely. Josh, if you've never had a coach before, you really need to consider it. I'll be honest, I never had a coach. I never had a coach until maybe a year ago, a true coach. And then all of a sudden I had multiple coaches, and I was meeting with coaches every week. And it is phenomenal. I don't know how I ever got this far without one.
Yeah, it's accountability. If you have somebody there that you're answering to, that's not, I'm going to say someone close to you, like an outside person that really taps you on the shoulder and keeps you in line with what your goals are. It helps you accelerate to your goals, keeps you intact. That's coaches are, it just, even to have someone there to talk things through and go through the decision making process, to have someone get their side of the opinion, it helps a ton for sure. Totally agree.
Yeah, absolutely. Here's the thing about a coach. The difference between coaching, consulting, mentoring. A mentor is somebody who's been there, done that, and going to show you how you should do it if you want to have the kind of success that they had. A consultant has their own agenda, and they're going to come to the table and basically describe an entire approach of how you need to get from point A to point B. A coach works with the individual who already has the answers. If I'm coaching you, you already know what you need to be doing. It's my job as a coach to help pull that out, help you recognize that. And then once you see it, like you said, hold you accountable to taking action.
Yeah. Yeah. If your goal is, just call it 1,000 units, you're gonna break down how you're gonna get there, and then making sure you're taking the action steps to get there. It's totally agree. Very cool. On the real estate front, what areas are you all focusing on? I know you just closed in Houston. What areas are driving your focus?
Yeah, so that's a key point, is pick a market, right? If you're new into real estate in general, you can't be an expert in every market. And so for me, I started in Houston because I used to live there and I know the area very, very well. And literally, just on the other side of the tracks, so to speak, can be a totally different type of asset than on the
Yeah.
other side. But I've also focused on San Antonio and the Oklahoma City MSA. Those are my core markets. I've also invested in places like the DFW area. I've got a property in Waco, Texas, which is kind of in between, maybe DFW and Austin area. But basically, Texas and Oklahoma have been my markets.
Very cool. What kind of considerations are you taking in your all's underwriting as far as interest rates, and are you all doing a refinance in your time horizon or 5 to 10 year holds?
We will consider a refi if we're doing bridge financing. It has to work without it though.
Yeah.
Right. So, interest rates are what they are. And I think the biggest thing for everybody has been the volatility of rates. And from getting a property under contract to getting to the closing table, it takes longer than it used to.
Mm-hmm.
And so there's so much variability that could happen. And that's what has, kind of challenged a lot of investors. But as things start to stabilize, and if you're very conservative in the projections on your interest rates and really the entire, debt financing, I think you'll be okay, but you got to stick with your numbers. And that might mean that you're going to put in an offer that's a lower price than perhaps the seller is willing to accept, but
Yeah.
stick with it. The other thing is rent growth. We've all gotten so used to this heyday of double-digit rent growth, crazy rent growth over the last couple of years. And, it's back to fundamentals. There's still some areas where you can be pushing 5 or 6%, but, 3 to 4% is probably more where you should be underwriting in most markets. So
That's stable. Those are stable metrics for sure. And that's your expense growth goes up 3%, your rent growth goes up 3%. They zero each other out, but that's conservative underwriting for future years.
yeah, and I think everybody always, looks at taxes, which especially like in Texas, you're gonna have crazy taxes. But insurance has gotten like off the charts.
Yeah.
And so that is something that, again, knowing your market, you really need to understand what the cost per door is for insurance. And it's gonna vary wildly from market to market.
Yeah. I did hear something about Florida. They're working on passing a bill or some kind of legislature to help with the insurance costs in Florida, because the amount of impact it's taking on homeowners just in general. Florida, I think it's you're almost unable to even underwrite a property because of the amount of insurance costs. It doesn't make sense.
Yeah.
For sure. So what's the future look like for you, Tony?
So I think the future is I have this three-legged stool, actually. One thing that we didn't talk about, just mentioned briefly, but the three-legged stool for me is I'm still very much focused on multifamily real estate. My focus, my lane has been more on the capital attraction, capital raising side of the business. I have done asset management and could still do that, but it's not really the operations that get me excited. So I focus on more the capital side, the investor relations side. I will probably do 3 deals this year. The first one kind of tied me up for a little longer than I would have liked. I did 4 multifamily deals last year, so I'm probably going to do 3 this year. But multifamily, one leg of the stool. My coaching business is the other leg of the stool, very much focused on growing that aspect of my business. And then the third piece is that I kind of dovetail the coaching and the real estate together, and I provide fractional CFO services for real estate companies. So I work with a team, and I get to sit with owners of real estate businesses and help them look at their finances and make good decisions to grow their businesses with the lens of finances. And it's not just multifamily. I work with wholesalers, flippers, short-term rentals, you name it. So that's just something that I think fits very well into my background and experience.
Very cool. And for the listeners, well, you know this, but there's different accounting methods. There's a different accounting language for different businesses. Your tool hardware store has a different accounting language than multifamily, than real estate. Your manufacturing has a different accounting. Accounting's accounting. You still, uh, but as far as like CapEx, capital expenditures, you're going in to renovate a unit, you're going to be spending money on flooring, on countertops, on cabinetry, on light fixtures, on plumbing. Those are capital expenditures, and those go below your line, below your net operating income. They don't go in as an expense and lower your NOI. And those are things that you help people see through and properly put the accounting methods in place to essentially help not devalue their own property and take advantage of depreciation at the same time. There's different languages and different nuances that you need to be made aware of, or even just know, so that you're not essentially hurting yourself. And Tony, that's what you come in and do. Is that correct?
Yeah, I mean, you hit it right. There's certainly that. Also, something that I see a lot is a lot of operators will not consider like a cost of goods sold. And by no stretch am I going to say I'm a CPA or bookkeeper, but anybody who's looked at financial statements and run a P&L needs to consider how they're reporting some of the expenses that they had. When you keep things just as an operating expense, then certainly everything kind of comes down to net income. But when you're looking at the profitability of your business, you really need to consider, is this an expense that is a direct relationship to having this property or this asset? And if it is, it needs to go in a cost of goods sold so that you look at your gross profit margin. A gross profit margin is going to tell you how profitable your business is. And if you're doing, say, flips, you want to know from flip to flip, is this a profitable deal or not? You got your overhead expenses for your company. And those are things, obviously, we can do an expense analysis and help to fine tune as well. But that's the cost of you running your business as a whole, whether you do one flip or 100 flips, right? So you got to kind of split these out a little bit, and it's going to help you really look into your business and know whether you've got a profitable business or if you got multiple business lines, where you're getting more profitability versus another area. It might help you kind of fine tune the way you approach your business.
Yeah. Yeah. And that helps seal any kind of leaks you have in your cup. Keep on putting money in your cup and it falls out of the bottom. So if you know where your leaks are at, keep the cup filled. I like it.
Yeah.
So Tony, if somebody wants to get a hold of you and find out more about yourself, your company, invest with you, how can they get a hold of you?
Well, we can certainly put it in the show notes.
We will. Yeah.
Mention a few different businesses, but I'll keep it simple. Probably the best way is through my real estate company, Tony, Tony, at Novo, Novo, multifamilygroup.com.
Cool.
Yep.
Awesome. Very cool. Can I find you out there on social media as well?
Of course.
Very good. Very good. Tony, we definitely appreciate your time today. I look forward to following you and seeing how big you grow, man.
Okay,
All right.
thanks.
Thanks, Tony.